Okay, part 4 of this series on forex pattern. So today we're gonna be looking at support and resistance pattern, more like a sideways pattern. So this is when like the current market is currently trending in sideways pattern. Okay, it's testing the support and resistance line for so many times that it's just choppy. All right. Personally, I avoid such markets, but I have a currency a sitting currency with a strategy of support and resistance. Most of the times I trade the Canadian yen using this strategy, support and resistance and the pattern. So yeah, so that's what it is. Let's jump into it. First example. Okay, so how do you trade? As I said, okay, first of all, as I say that support. Okay, so this is resistance line. Okay, this line here, this strong line, resistance, and this one is support. Okay, it's supporting. All right, so don't get confused for resistance. Sometimes also get confused with that, but this on top here is resistance, this is support. Okay, as I said, support resistance, it's more like a sideways pattern. Okay, the market is trading choppy-ish. Yeah, just trading back down, back down, back down, or up down, up down, stuff like that. So how do you trade this? Again, personally, I don't get involved in such, but if I see opportunity on the Canadian yen, which I've studied for that, I get into that, I get involved, but most of the times I don't get involved. But yeah, so there are a lot of ways you can trade this, but I'll give you the safe one, and yeah, you can get something out of it. Most of the times, I'm not sure I swing traders trade this. Okay, maybe if it's on a higher time frame, maybe let's say this was a weekly chart, and then we analyze that the market is gonna go up, so we go to the daily chart and then we enter. So that's when you can swing trade the choppy market and resistance. But if you're a scalper, which I'm not really sure how you do it. I'm sure you enter from the bottom and then exit there, same as a swing trader, but swing trader on the higher time frame, I think. So that would be the difference here. So basically I think you trade it the same. Yeah, so let's say we decided to enter from here, right? Okay, right. The market, let's say the market or the price went and then came down there, right? And then had a bounce back up here, all right? And then we get confirmation. I don't know what if you use indicators, but I mostly advise that you study first price action. Very important before you jump into an indicator. Make sure you know the candlesticks, like as I've been talking about in this previous videos that I've been making. That knowing types of candlesticks really helpful and can develop a skill on you. You should know the hammer, the doji, just reversal candlesticks. You know, it's very handy because sometimes, okay, sometimes indicators may tend to give you false information. So price action really is something that you have to take into key. Yeah. So let's say a hammer, or let's say okay, doji occurred right here, right? A doji is this. If you don't know what a doji is this, okay? When you see something like this, like a star, okay, this is a doji, all right? So let's say it occurred somewhere there, all right? It occurred somewhere here. We got the confirmation that okay, a reversal is going to occur, and to add on to that, we know that okay, a doji has formed, right? And look, this is a strong support, all right? So there we have two confirmations already. Two from this price action here. Okay, doji occurred, reversal, sign of reversal, and then we have a strong support which the market has tested many times, okay, in the previous data. So let's say we wait for maybe like after a doji occurred, right? We wait for something like this. A green candlestick and another green candlestick. Okay, so let's say that occurred, okay, and we decide, okay, I'm going to enter now, right? So let's say you entered from here, okay, you entered right there in the trade, okay, you're in the trade. So where do you put your stop loss? You would want to put your stop loss right below the doji, okay, right below the, okay, any candlestick. Okay, let's just say on the support, right? here, just there. That's why you'd like to put your stop loss. We wouldn't want to be in this trade if the market crosses this strong support. We wouldn't like to be in it. Okay, that's another sign for a reversal occurring. Okay, the market might continue going to the downside, so you'd want to do that. Okay, risk management. I'm not sure how you risk your risk appetite, but I am very conservative if it's protecting my capital in that. Okay, so let's say you enter there, and why do you put your take profit? Okay, you don't want to put your take profit exactly on this resistance line. Okay, because sometimes the market may turn here. All right, it can turn at any point in choppy markets. Okay, let's say it can turn over here. Okay, let's say you put your take profit there, and then the market turns and then goes down. Okay, you wouldn't want that. So what you do is try to get just look for a strong support, on the upside. Okay, so let's say maybe the market has tested this support a lot of times. Like there's a certain level at this point which the market has tested it, like maybe at the pullback, stuff like that, before it actually goes there. So that's why you'd want to put your take profit. So that when you enter the trade and then your trade goes your way, of course, maybe they're gonna be up and down there. You take your profits, even if the market tends that to the downside. You've already taken your profit and you're happy with it. Even if it touches there or maybe decides to break out and then goes up, you have already gotten your profit, which is fine with that. Same applies to the downside. Okay, you wait, and I'm not sure what you do again. So let's say, okay, price action there, you do everything, the technical indicators. I don't know if you use fundamental, very important again. If you're a long-term trader, you have to get into fundamentals, of course, which I do. So you want to enter here, right there, put your stop loss right there. Okay, again, give it a little bit some space. So right below the reversal candle here, let's say a hammer occurred here on top. So if you don't know what a hammer is, it's let's say an upside hammer. Okay, this is the one. All right, this hammer, when it occurs on the upside, it's a sign of a reversal that's going to go down. And then if a 100 hammer occurs, let's say it's just when it occurs on the downside. Okay, when this occurs here, right here, this is a sign of reversal that is gonna go up. Okay, so let's say that occurred, then you just put it right below there. So you enter the trade, and again, you'll look for strong support, and I'm sure a lot of times there are going to be those when trading. So you put it over there. You don't want to put your take profit right on this resistance line, because the market can turn at any point. Anyway, but those are some tips. You can trade it the way you want it, but it's safer. Again, you don't want to be greedy in this thing. Okay, let winners run. That occasion, I take it as maybe when you're trending in the upside. Okay, like you're going up and up and up, you're in an uptrend. So that's when I let some winners run. But most of the time, if in a choppy market, you'd want to get your take profit and get out of there. Okay, this is not an uptrend. This is a shopping market. Okay, anything can happen here. There's a lot of noise. So this is how you do that. Okay, right. So I have a chart here, like one. Okay, and it's a lot messy. Yes, yes, very much a lot messy. It's not as clean as the examples I've been giving you even in the previous videos. Okay, I have stated that. So it's messy. So let's just try to, okay, you get used to it. You get used to it. So this looks like a strong support right there, like resistance. This looks like a strong resistance. All right, there. That's our first one. Working our second one, B. This one looks like it tested a lot of times over here. Let me see, maybe I can try to find. Yeah, that's our second one. And our third one here, likely really tested this support a lot, so I can even go up to the end. Yeah, so as I say, guys, you see here, this market can turn at any point. That's why most of the time personally I try to avoid this. Okay, an example, look here, it reversed. Okay, you would expect it to go from here and maybe test this support or this support, but it reversed fast. That's the first one. You see that? And as I say, you want to be very conservative if you're trading this thing. Okay, reverses every time. Even here, look at this, look at this. You would expect it to go to the upside, but again, before going that, it reversed. The yeah, so you just have to be very curious, very, let's say, keep an eye on it, alert. Yeah, okay. So how would you trade this? As I said even in the previous one, the best way I think to do it is when the support here hits the upside here. See this? Okay, so you want to enter your trade right there when that happens and put your stop loss right about there. Okay, why am I saying this? Because even if the market tends to reverse to the upside and let's say you stay in the trade, you won't get stopped out. Okay, right? So if you're very patient and let's say you put your take profit right here, right, and you enter there, okay, even when the market goes up, you won't get stopped out because it's likely that it's going to bounce back down to the downside when it hits this resistance line, and then when that happens, it goes down. All right, and hits you, takes your profit, and you get out from there. Okay, so you get out from there. All right, even here I can see something very interesting. Say if you're very good at price action, right? Okay, so this I can see something here. Okay, look at this. Even during the support and resistance, you can identify like mini trend lines or mini patterns, yeah, mini patterns. Like here I can see something. Look at this. This is an ascending. Yeah, 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 very much. All right, this is an ascending triangle. If you haven't seen the video, I made this one as a part one. Okay, so you can just go check it out. Link is in the description. I'm sure it's gonna pop up when at the end of the video. So when this happens, you would want to, when the breakout occurs. Okay, I'm not going to go into much details in this thing. I've already made the video. You can go check it out. So let's say I enter from here, right? I enter my trade right here after the breakout occurs, and then I put my stop loss right about here. Okay, and with all, do you even know that okay, this is a resistance, this is support and support. So where would, in which direction would the market go? We are likely to know okay, it's gonna, of course it's gonna go down. You'd want to put your take profit right here. Okay, and of course when this happens, this is where I'll say let winners run. Okay, why am I saying this? Because you wouldn't look at this, look at this candlestick. Okay, this is not a reversal candlestick. Okay, this is a candlestick which makes a continuation. Okay, this long good which is working in our favor candlestick is a friend of ours, so we can take advantage of that and maybe put a trailing stop. Okay, if you don't know what a trailing stop is, I'm sure I'll make a video of that. Okay, so yeah, if let's say doji occurred over here, you want to exit, but this strong candlestick is looking good and you want to still stay in this trade. But again, if you're not comfortable with that, you can take a profit here. But if you're comfortable with that, you can maybe, let's say here you target it here, right? And then let's say the market goes and then reverses and then takes you out right there. Okay, that's how a trading stop works. If the market moves down, this stop loss will come over here, and then okay, it's a video for it, it's a topic for another day. So that's how it is here, and everything else really is something good. Again, I can see something here, here, see that ascending triangle really works wonders, you know. There, breaks out long candle. Okay, enter there, you put your stop loss right over there. Okay, that's how it works. So all these things, it it all these things happen just like on a regular basis. It's like a clock. Reaches 24 hours again, starts again, 24 hours starts again, just like that. So everything comes in a circle, 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 circle. So that's how it is. Support, resistance, and then in the support and resistance pattern, there are also patterns, mini patterns that you can take advantage of, identify them, and you can do it. Really help. That's why I recommend that you, before rushing to any indicators, you take time to understand price action. Very important, and can very much help you in this in your skills and developing yourself. So yeah, that was it for today, guys. And yeah, don't forget to hit the subscribe button, hit the notification bar, share this video to your friends if you found it helpful. Comment below, and am I forgetting anything? No. Okay, and I'll see you in the next video.